Welcome to the CryptoWise channel. My name is Dave. Thanks for being here. On this channel, we talk about macro technical analysis, facts in the charts, and staying cool, calm, and focused. Today, we're going to be talking about Near Protocol. I'm going to give you an update on Near Protocol, an update on Bitcoin and the expectation, and my adjustments to where to accumulate Near at its bear market bottom. Targets. Let's get into it. So in a previous video about a month ago, I talked about my accumulation zone for Near Protocol, and we can see that the price was sitting at about $1.29. And since then, Near seen an impressive move to the upside. Nothing too crazy, but we did see a 131% move in total, which we have retraced down, and now we're only up about 60% from that move. So it did have a pretty impressive move, while Bitcoin, during that time, actually seen some downside. Yeah, so when Bitcoin saw that downside is when Near decided to pull back. So what is my expectation now? Well, we'll look at a few things here. So basically, Near has been trading in this downward sloping channel, which usually is a bullish pattern, which we did break out of, and now we're sitting on the back tests, which typically, if this was playing out as a reversal, would see a continuation higher. And there's a couple reasons why I don't think that's likely. And I'm going to get into that right now. With Bitcoin, we have seen this bear flag play out. If you remember in my previous video, I talked about this bear flag several times, in fact, for an entire month. And I even made a video 3 weeks ago talking about Bitcoin dropping 40% from here when it was still sitting at around 80,000, and talked about this bear flag topping around 82 for quite some time. And we're still expecting that target to be hit around 53 to 50K. It could go all the way down to 48K. So if we do a measured move target out of this bear flag, right, so we can get an assessment, I don't expect Near to go on a rally while Bitcoin is still in a major downtrend. It's very common that we see impulsive moves in altcoins in a bear market, and they rally to the downside. We see these impulses up, and then they pull back and come back to their prior lows, or even lower potentially, right? Which in this, what I'm drawing in this case, would fit going into the accumulation zone that I had talked about. So let's look at that for now. We got this bear flag target. Measuring the bear flag target, we take the measurement of the flag pole, put it inside the flag like so, and we can see that Bitcoin made a good chunk of that move down already. Right, so far it has seen 27% of that move, and there's still a little bit more to get to 37%. So the measured move expectation target is around 52K approximately, which would be a 37% move from that swing high of the bear flag. And we're not quite there yet. We are trending below the range on the daily time frame. So the expectation, as long as we don't start pushing into higher levels, the expectation is that this is bearish and that will continue down to reach the target. And that continuation down will push Near down, because we can see on the daily time frame for Near that when we actually reached this local high from this move was when Bitcoin decided to take a dump. So we can see here the peak happened here on June 3rd. Let's look where Bitcoin was on June 3rd. June 3rd, Bitcoin was breaking down. Actually, first, second, and third, and 4th, 5th, Bitcoin was in a downtrend and had made a move down of 19% within those days. And if we look at near, it peaked on the 3rd of June and then made this double top reversal pattern on the daily and continued down within those same days from the 3rd to the 5th and 6th. So it did see a pullback based on Bitcoin's move down. Understand, always Bitcoin is the mover of altcoins. It's rare to see altcoins go into a parabolic move or its own run without Bitcoin. It does happen, but my expectation is that near will break back down. As Bitcoin continues to see downside. Now, that's one of the things. This bear flag target hasn't been met. Bitcoin has still further downside targets that we've been talking about on this channel for some time, and 44K being a very important level to be reached, which is the 50% retracement of this entire bull run from swing low to swing high. We can see the 0.5 here at 44,250 is a level that I'm expecting that will be hit either before or in the range respected of the 4-year cycle, which should land somewhere along the last week of September and the first week of October. So that is my expected target based on all the bottom signals I've been talking about. So it's still valid and makes a lot of sense that we see those levels before any big macro reversals. Okay, so another reason is we have the now when I look at the near BTC chart. Now this is a chart that basically compares near to Bitcoin. So on this chart, if this chart is doing well, that means regardless of what, basically it's measured against Bitcoin. So if it pumps really hard, so if, let's say we do 50% move on this chart, Bitcoin is sideways, then that means the near chart, near USD, will likely be doing a 50% move to the upside. Right? So we can measure that from the swing low to swing high. We see a 261% move. If I measure, let's just see what day this started. On the 6th of February, is that low? Where's the 6th of February? It's over here. So if I measure the swing high to swing low, or swing low to swing high, 6th of February is that wick there. We see, look at that, 226%. Very close to this, only off by 40%. Which basically means near went on its own rally without Bitcoin. Okay? So this chart performs well, then this chart performs well. You typically are buying near against the US dollar because you're exchanging your US dollars for near, but this chart helps us give us a clue as to where it could be going. And what do I see? I see a reversal pattern building right now on the daily 12-hour. That very much looks like a head and shoulders pattern. Will it play out? I don't know 100%. But these have a high probability of playing out, and it looks just like a head and shoulders. They're up to 93% accuracy that these play out. Whether the price will break all the way down and reach the target and or break into a major reversal is yet to be seen, but the probabilities of this head and shoulders pattern playing out are usually pretty high, somewhere between 80 to 93%. This is a head and shoulders pattern. We have the left shoulder, the head, and the right shoulder, and we have the neckline. Once the price breaks the neckline with volume support, it is expected that the target will be met with higher probability. And when we see the near BTC chart, we can see that if this head and shoulders pattern plays out, we take a measure move price target out of the head, put it at the point of the neckline, and the target is way back into this zone here. So if we measure from where we are now to the target is a 37% loss against Bitcoin. And if this breaks down at the same time that Bitcoin continues down and makes another 18%, then you'd accumulate the loss on top of that. So if both of those scenarios happen at the same time, which is very possible, that means you'd add 37% on this chart plus the 18% on this chart. Let's just round it up to 20. So that'll give you a 57% move to the downside for this chart, because that's just how the math works. So if we were to measure a 57% move to the downside from where it is, and look at that, right back to our major support level. So this is what I'm leaning towards. That makes a lot of sense, because altcoins often see these moves where there's impulses and they get rejected and come back down. Case in point, let's look at, there's a couple. There's XLM, there is HBAR. So let's pop those up. These coins do these random rallies and retrace pretty aggressively. It happens a lot in bear markets, and then they continue lower. So here's a perfect example. Let me go on the daily time frame. Look at this. I mean, if you saw this happening, it's like, whoa, wait a minute. Why is HBAR pumping? Two big green candles. Let's measure what that is. Right? From that swing low to swing high. Oh, look at that. 22%. And it even went higher. It did another 33%. I mean, obviously it doesn't compare to a 200% move. But still, a 33% move going into May, HBAR basically decoupled from Bitcoin. And then it gave it all back and went further down. And we could look at XLM as well. XLM had its own little impulse as well that was a bit aggressive, and gave a lot of it back, not the whole thing, but we can see that from this swing low here, right, we had a very strong move from that swing low here of this range to that swing high of about 110%. That's not a little move, right? And it retraced most of it, and it's now only up 33%. Okay? So, and we could also look at previous histories before the price even fully bottomed before a rally. We saw impulses to the upside. I think in this case once. We had a bear market low here in December 2022 for XLM. Then we had this impulse up of 162%, only to go sideways and give most of it back before the alt season rally. That was really what you want to be a part of if you're looking for, the major gain of this coin when it decided to shine, let's say. That's when you'd want to be in. Make sure that you're part of at least, and not FOMO in on this move here and catch it halfway through the move. You obviously want to catch it down low. So I would just relax about near and not FOMO. I personally recommend not FOMOing and buying near. I think there's a high probability that these gains will be given back, and we will see the price move back into these lows. Now, the reaction to those lows this time will be a strong indicator of where it decides to go. So based on that, I'm going to adjust my buying zone a little bit and move this up to here. And the reason is because now there's a few different support zones. There's still this support zone here at 53, so I think that's the max that we would ever go down to, because that's basically a macro low. We do have this level here at 90 cents being strongly defended. So that's an area, that's a buying zone that I would recommend being a high probability area that it will sustain a support. Can it go lower? Yes. Will it go lower? I don't know. But there's a high probability that we'll see this zone tested again based on those factors and the specific chart pattern that we see on near. And we can also see on the weekly time frame that we also see this weekly candle close looks very weak. That is pretty much a bearish hammer candle. Those two of them. So it's having a hard time sustaining the price properly on the weekly time frame. So if I were to move this to that weekly wick there, we're actually under the range, depending on how you look at it. Yeah, see, look, there's the wick there. So we're technically not above this range. We can actually, the resistance range is actually, yeah, we're not above it. So it's actually being challenged here. So this gives me more evidence. So we're going to measure the range like this. Let me get this line out of the way. This is how we do this. Because a range, support and resistance range, often is you use data based on previous history and where price is likely to bounce. So we're going to start it on these wicks over here. We're going to move it along, and you see that the start of those wicks goes into the candle close here. And we're going to put it at the bottom of that wick there. So there's our resistance range, okay? And you can see that the price is not completely broken above and holding above, which means it never technically broke the range. It flirted with it. It did push above it temporarily and came back down. If I look at the daily time frame, I mean, you can see that it's forming this head and shoulders pattern, and the head was the peak above the range that didn't sustain. And we're trending in the resistance range, which is not enough to confidently say that that there will be continuation. In fact, we see a strong bearish divergence on the daily time frame. So we have when the price makes a high and a higher high, and the RSI makes a low and a lower low at those respected points, low and then lower low, it talks about weakening momentum. So this fits the data, right? Weakening momentum, right? Strong impulse at another move, weakening momentum, and now it's making a right side shoulder, and there's a likelihood that we will see a correction back down to these levels at this point. That is the expectation based on what I'm seeing. It's very common to see when price isn't breaking above resistance. If it doesn't break above resistance, then it usually gets rejected. So that's what we're looking at the moment. And yeah, at the very least, we'll see it break back down to this support level here, which will support the thesis that near itself will break back down to this support level here at 0.91. Okay, so yeah, so and what else? H bar, XLM, yeah, coins do this, very common, and people get really excited even though Bitcoin hasn't actually bottomed yet. And altcoins get these impulses from their macro support lows. Very common. And it's good to be aware of those because then you can start accumulating. So I would personally recommend looking at this zone here for buying between 90 cents and $1.08. Which if you, let's say you bought at $1 or 99, $1. If it went back to where it is now, that would be a 100% move. So buying in now, you could potentially miss on a 100% move. So yeah, these are things that happen in the market that really test your patience and your willingness to take a breather and understand and wait for the opportunity. If you missed it, then that's okay because there's plenty of other ones. And yeah, so this is my analysis, and yeah, hopefully you guys find this helpful, and like, share, subscribe. Appreciate you guys, and if you have any other coins that you're interested in seeing updates, please comment in the description or in the comment section below, and I'll see you in the next video. Peace.